Andrew Snyder is the senior editor of Breakaway Investor. He specializes in uncovering companies that are destined to become industry leaders. Andrew, what's your favorite company right now?
Right now, Sandy, my favorite company is Netflix. If I had to go out into the market and find just one company to recommend, it would certainly be Netflix. No matter what the economy does, this company is going to do extremely well.
So why do you like Netflix so much?
Well, it's got everything I look for. First, it's in an extremely large market. It's in a market that's growing. It has a dominant share of that market. And one of the greatest things is the share price is cheap. It's at $22. Down from its high of about $33 earlier this year. And to top it all off, it's moving into the digital download market where you can get videos off the internet, download them. It's slowly moving into that. It looks like it'll be a dominator, and that's the kicker. It makes it a real grand slam.
Is the downloadable video market kicking into gear because of Apple's download of movies from their iTunes store?
Well, iTunes and Amazon's Unbox, they're trying to make the market. I like to look at the market as kind of a push market versus a pull market. You have Amazon and Apple pushing their product onto the market, and it doesn't look like it's ready yet. On the other side, you have Netflix waiting for the market to really come into maturity, and they're going to allow the consumers to pull the product onto the market.
Don't you think that Netflix faces some stiff competition in this area? I mean, after all, we've got Apple now, and then you mentioned Google. Aren't those people who are going to be competing for this as well?
It depends on how you look at it. If you look at Netflix as a company that delivers DVDs through the mail, there is no competition. Walmart tried to do it. Blockbuster tried to do it. This is the only company that's beat Walmart so far. There's no companies out there that have been able to compete with Walmart. Netflix is doing it. It's got a great management team. Blockbuster, they're out of the picture. If you look at the downloadable side, there's all sorts of white noise in the background. A lot of companies doing this, but Netflix is the only one that has the name brand out there right now. Netflix is going to be the winner.
So you think they're ahead of the market? You think they're ahead of the curve here?
They have the brand. One of the things I always look for at Breakaway Investor is a company that has a brand that as their market grows, they'll grow a bigger and bigger piece of that market. And that's exactly what Netflix has.
Now, about this download of videos, isn't the download time the customer has to go through, isn't that going to be a concern for Netflix?
That's a major concern, and Amazon's Unbox just came out last week or the week before or so. It takes about as long as 5 hours with a high-speed connection to download a movie. By that time, you could drive to a Blockbuster 2 states over and get your movie. So Netflix, they haven't unveiled anything yet. Their official delivery date of their new service is supposed to be January. There's hints that it might be coming sooner, but you can bet they're going to have something to compete against the Unbox and make sure their downloads are much faster.
How costly is Netflix for an investor?
Well, for an investor, share price $22. If you're looking as a consumer, it's $18 a month, $17.99 a month. They've gotten about 5 million subscribers with that. They're doing about 1 million transactions a day, and those rates are growing. Subscribers have doubled or grown by 50% over the last year. Next year is supposed to do the same thing.
Do you see them continuing with this kind of growth?
I do. Revenues have grown by over 250% over the last 3 years. Bottom line's grown by 60%. It's supposed to grow by 30% this year. Next year, easily 30%, even 40%. If it makes it into the downloadable market with some good momentum, all bets are off.
Is Netflix your best recommendation? Is that your strong buy for investors right now?
Yeah, if I had to pick just one, it would certainly be Netflix. I think you should get some shares right now, $22, buy it under $25. Put it in your back pocket and call your realtor. You're going to be looking for a new vacation house soon.
Where do you think that stock price might actually go to?
Well, it was at $33. $40 wouldn't be a problem if it continues online with its plans now. It stays in the DVDs, comes out with downloadable videos in January. $45.50 if it breaks onto the scene much quicker.
So good price, lots of growth ahead for Netflix.
You can't beat it. It's a great grand slam.
Thanks, Andy.
Thank you.
So now, while most investors are still figuring out what types of investments make the most sense after hearing the Fed's decision to remain neutral on rates, you know exactly what to do. Andrew suggests you take up shares of Netflix, a company that will continue to flourish. Todd recommends putting a portion of your money into dividend-paying stocks, and Adam suggests portfolio protection as he sees recession looming around the corner. I suggest you take these editors up on their recommendations for a triple play attack. You can find out more at taipanfinancialnews.com. Until next week, here's to great profits from smart investing.